Welcome to the deep dive. Get ready because we're about to explore something, well, truly monumental shaping our world. It's the profound and honestly often surprising impact of artificial intelligence AI on finance, on business, and maybe even on our collective future, our mission today. To really dive deep into AI's astonishing transformations, we want to uncover those hidden opportunities, understand the inherent risks, and most importantly, figure out what this revolutionary tech truly means for you. And look, this isn't just about silicon and algorithms, right? It's about a fundamental reshaping of how we invest, how we work, and maybe even how we think.
Exactly. And the scale of this shift is, well, it's just breathtaking. AI isn't some far-off concept. It's happening right now. Just think about this. Over 90% of investment managers are either already using AI or planning to integrate it very soon. And more than half, they've already fully woven it into their strategies. This isn't just an incremental update. It feels more like a quantum leap. These aren't simple automated scripts. We're talking about advanced machine learning that learns, that adapts, that makes decisions in real time based on data that's constantly changing. The goal isn't really to replace human judgment entirely. It's more about supercharging it, making it sharper, faster, and, frankly, infinitely more perceptive than we could have imagined before.
Okay, let's try and unpack that. Just how much power is AI unleashing in the investment world? We all know about data, right? But AI seems to take this ocean of information and turn it into decisive action. And the speed and scale, it's really remarkable. You mentioned AI systems processing vast amounts of financial data, but also, crucially, alternative data simultaneously. So they're spotting opportunities that, well, traditional methods or even the most diligent human teams would just completely miss.
Yes.
Analyzing thousands of companies, digging through over 1 million data points, not yearly, not quarterly, but every single day. That's a level of insight that humans just can't match, can they?
That's exactly right. And what's truly astonishing is the incredible nuance AI navigates. It goes so far beyond just crunching the numbers from structured data like, stock prices or trading volumes. It dives deep into this boundless ocean of unstructured data. Things like subtle shifts in news sentiment, the whispers on social media, narratives from satellite imagery, even intricate patterns from IoT sensors in factories or cities, the specific language in patent applications, or, get this, the real-time GPS of cargo ships moving across the globe. The real magic, though, happens in its pattern recognition layer. AI uses these advanced techniques, things like quantum machine learning, which tackles calculations traditional supercomputers just choke on, and computer vision for analyzing visual data, like charts. It finds these incredibly subtle correlations that, honestly, traditional statistics would never pick up. We're seeing systems now that track the emotional tone in earnings call transcripts using natural language processing. Or they use large language models to scan huge amounts of social media, uncovering hidden investor sentiment way before it becomes obvious. Let me give you a really compelling example of that power. Imagine a semiconductor company. Okay. A human analyst, they might meticulously look at the financials, right? Focusing on inventory, gross margins, the usual stuff. But an AI takes that same information and synthesizes it with maybe 1,000 other faint signals. It might spot a tiny, almost invisible increase in power use at their factories from utility data. At the same time, it sees a quiet rise in quality control job postings on some obscure online board, and maybe a sudden surge in academic papers citing their tech and scientific databases. Now, individually, these are just tiny ripples, right? Barely noticeable. But together, the AI sees the pattern, the emerging tide. It hints, often with surprising accuracy, at an imminent production breakthrough, something that could completely change that company's market position. This is where AI goes beyond just analysis. It actually moves into predicting future performance. It creates this dynamic, ever-evolving investment approach. It's an adaptive decision-making layer that, well, human intuition alone or even rigid rule-based algorithms, they just can't replicate that at scale.
Wow, that's the level of foresight that almost sounds like having a financial clairvoyant on your team. But does that clairvoyance ever lead to, I don't know, blind spots? Or maybe create new kinds of unforeseen risks? And beyond just prediction, how else is AI really shaking things up in investment strategy?
Well, it's definitely a tool, not a crystal ball, so vigilance is always key. But its capabilities are profound, absolutely. We can probably highlight about 7 transformative ways AI is being applied right now in investing. First, let's talk about analyzing and picking stocks. AI systems don't just juggle a few metrics. They evaluate fundamental and technical factors, news sentiment, market trends, all at the same time. And crucially, they synthesize these different dimensions and adapt their weightings in real time. So for instance, during market stress, the AI might automatically give more weight to technical factors, market structure, But during stable periods, it might shift focus back to fundamental growth and earnings. It's constantly optimizing, always learning what signals matter most right now. And that really leads straight into the second way, summarizing investor sentiment. And look, this isn't your grandfather's simple positive negative classification anymore. Today's systems use what we call contextual sentiment analysis. They understand nuance, sarcasm, the implicit meaning hidden in huge amounts of text and communication. Imagine an AI listening to earnings calls. It doesn't just analyze what the CEO says, but how they say it. Their tone, their speaking patterns compared to past calls, word choices, even tiny hesitations when answering tough questions. This system might pick up that, okay, the CEO's prepared remarks sound great, really positive, but their answers to follow-up questions show subtle signs of uncertainty about, say, a specific business segment. That gives you these incredibly valuable early warning signals. You can detect potential problems long before they show up in the official numbers or smack the stock price. It's almost like reading the subtext of the entire market.
That feels like a massive strategic advantage for anyone who can tap into it.
So, okay, what about managing the portfolios we already have? How does AI help there?
That's our third point, assisting with portfolio management and asset allocation. AI essentially becomes your automated financial architect. It can optimize portfolios based on your specific goals, your risk tolerance, and importantly, real-time market conditions. It's constantly monitoring and rebalancing as needed. We're already seeing things like AI-powered ETFs,
Yeah.
like the Amplify AI-powered equity ETF, AIEQ. It uses IBM Watson to crunch millions of data points to pick stocks.
That sounds incredibly sophisticated, almost futuristic, but does a tool like that consistently beat traditional investment strategies? Is it outperforming the market? Oh, that raises a really important question, and it's a critical caveat, actually. While AI EQ is definitely powerful technology, its actual real-world performance, well, through early 2025, it actually lagged behind the S&P 500. So this is a crucial takeaway. AI isn't somehow inherently superior to traditional index investing. It's a highly sophisticated tool. Yes, it provides capabilities that were unthinkable just a few years ago, but it's not some magic bullet guaranteeing better returns. It just enables a different, very data-intensive approach.
Right, a tool to be wielded carefully, not just blindly followed. That makes a lot of sense. What about personalized advice, the kind you might get from a human financial advisor?
That brings us to the fourth transformation, offering personalized investment advice. And AI goes way beyond those simple questionnaires you fill out online. It creates genuinely individualized recommendations by analyzing your entire financial picture. We're talking spending patterns, career path, even where you live, and things like concentrated industry exposure from your job. It might recommend less tech exposure for a software engineer in Silicon Valley because, well, their human capital, their job security is already heavily tied to that sector. And it's a continuous learning loop. It adapts recommendations based on how you react to market swings, your trading habits during volatile times, your long-term financial behavior. It remembers more details than any human could, keeps emotions out of it, and builds this really dynamic advisory relationship that refines itself over time. Okay, number 5. AI transforms investing by revealing these hidden threads of risk. It's about evaluating predictive models and risk in a new way. Now, no system predicts the future with certainty, right? But AI models are exceptionally good at helping investors grasp the probability distributions of different outcomes. Advanced systems evaluate tons of risk factors simultaneously, market volatility, sure, but also company-specific risks pulled from news, regulatory filings, you name it. But what's truly revolutionary here is how AI dynamically maps the interconnections. Think about the complex web of financial relationships, supply chains, shared risk exposures. AI can predict cascade effects that traditional models often miss, especially in a crisis. For example, an AI might detect stress building in commercial real estate. Then it maps the likely impact on regional banks, then sees the ripple effect hitting small business lending and eventually flowing through to consumer spending and retail stocks. It can even pinpoint seemingly unrelated assets that might actually be effective hedges against these complex cascading risks. It's almost like having X-ray vision for the whole financial system.
That's a total game changer for managing risks, isn't it? Okay, so for number 6, you mentioned AI is literally rewriting history for a better future through backtesting insights. How does that work?
Yeah, it's pretty neat. Unlike traditional backtesting, which just replays old scenarios, AI-powered backtesting actually understands how market conditions evolve over time. It intelligently weights historical periods based on how relevant they are today. So, for example, if you're backtesting a strategy for electric vehicle stocks, the AI knows that auto industry data from the 1990s is way less relevant because the business models are just completely different now. Plus, it can simulate hypothetical scenarios, things that haven't actually happened historically. This prepares you better for what might be coming, not just what has already been. And the seventh way, which is one of the most innovative developments, honestly, is the ability to pull synthetic data. This means creating artificial data sets that mirror the real statistical properties and relationships you find in actual financial markets. And why is this so crucial? Well, it tackles a fundamental problem. We have limited historical data for rare but really significant market events, like major crises. We only have a handful of those, right? AI can generate thousands of synthetic crisis scenarios. It preserves the key characteristics but introduces variation.
Think about crypto markets. They have short histories. AI can generate synthetic data combining crypto's unique volatility with patterns seen in established markets during similar growth phases. This creates comprehensive testing environments that just wouldn't be possible otherwise. But critically, it augments real data. It doesn't replace it. It's this hybrid approach that's so powerful, filling the gaps in our understanding to help prepare for the unexpected.
Wow, that's genuinely mind-bending, creating data for things that haven't even happened. Okay, so we've talked a lot about using AI to invest smarter. Let's shift gears a bit. Let's talk about where the smart money is actually investing in AI itself. This feels like the real AI gold rush, doesn't it? The billions just pouring into this space. And this is where it gets really interesting, especially post-ChatGPT. We've just seen this massive, unprecedented surge in investment.
Oh, absolutely. If you connect this to the bigger picture, it's nothing short of a corporate land grab of historic proportions, particularly in the large language model space. Look at the numbers. Microsoft dumps $10 billion into OpenAI. Amazon puts $4 billion into Anthropic. Google adds another $2 billion into Anthropic. NVIDIA, over $1.3 billion into Inflection AI. The total investment in AI hit a new record in 2024, an absolutely astonishing $95 billion. That surpasses the previous peak in 2021. We saw 13 deals exceeding $1 billion each, including $6 billion for XAI and $5 billion for Waymo. And the median valuations, they are just staggering. A pre-seed AI startup in 2024 had a median valuation of $3.6 million. By Series C, that jumps to $588 million. The median revenue multiple for AI companies hit an amazing 29.7x. That's vastly higher than you see in traditional sectors. Now, obviously, these huge numbers reflect capital raises for very successful companies. It's also fair to say that traditional M&A exits might see lower multiples, partly because there's just less historical data compared to, say, established SaaS companies. But still, the excitement is palpable.
That is an incredible amount of capital flowing in. But for us, as regular investors, how do we tap into this without just buying into what might already be an overheated market? This brings us to something really interesting: oblique investing. Investing in the big trends without necessarily chasing the obvious, maybe overpriced names. Like, think back to the mid-2010s, right? NVIDIA was arguably an oblique play then. Intel was the obvious giant now. NVIDIA is the obvious choice. So what's the oblique play today?
Well, the new frontier for oblique AI investing is really fascinating. Take the Virtus Artificial Intelligence and Technology Opportunities Fund, AIO, as one example. Sure, it holds some NVIDIA and Meta, giving you that direct exposure. But the real genius, I think, is its holdings in companies that are using AI in really interesting, unexpected ways within their core business. These aren't companies typically priced as AI stocks. Think about Eli Lilly using AI to dramatically speed up drug discovery, or Progressive leveraging AI to slash its marketing costs, or even Deere & Company deploying AI for super efficient farming products like smart herbicide sprayers that use way fewer chemicals that directly impacts their bottom line. These are the hidden AI plays. They aren't necessarily priced for their AI integration yet, but they stand to gain enormous benefits from applying it. This is arguably where the real sustainable profits from AI might actually be found. And just as a compelling side note, a fund like AIO offers a significant dividend around 8%, which is a pretty stark contrast to the zero you typically get from the big mainstream tech players.
Okay, so this is clearly bigger than just investing. What does this all mean for how businesses actually operate? How is AI revolutionizing things across the board, impacting pretty much every industry?
We are seeing a truly radical transformation. Let's take intellectual property management. Traditionally, that's been this maze of complex negotiations, loads of due diligence, very subjective valuations. AI is just shattering those old barriers. You have AI tools now automating patent valuation. They use machine learning to analyze massive data sets, market trends, citation networks, litigation data to give much more accurate, objective valuations. They spot patterns humans just miss. Licensing talks, which used to drag on forever, they're being streamlined by AI contract analysis tools that review agreements, suggest fair terms, even automate clauses based on past deals. And AI is enabling totally new ways to monetize IP, like digital IP assets using blockchain and digital rights management. Now, of course, it's not all smooth sailing. You need high-quality data, IP law is complex and varies everywhere, and there are ethical things to consider, like bias and privacy. Integrating it is also a challenge. But the potential upside is just enormous.
It really sounds like it's rewriting the rules of engagement for businesses everywhere. Which brings us neatly to AI business process automation, BPA. You mentioned the adoption rates earlier, generative AI in the workplace surging from 22% in 2023 to 75% in 2024. That's not just growth, that's an explosion.
It absolutely is. AI BPA is analyzing historical data, spotting patterns, and continuously improving workflows, adapting almost seamlessly to new situations. The key components are incredibly powerful. You've got generative AI like Flowform Copilot designing entire processes, or AI summarization giving instant form overviews. Then there's machine learning for predictive analytics, think real-time fraud detection like PayPal uses. Agentic AI, basically, autonomous AI agents that make decisions and act functions like your personal assistant, extracting data, validating info, even doing sentiment analysis on CVs. Natural language processing powers intelligent chatbots like KLMs, changing customer service. And when you combine all this with enhanced robotic process automation, you take automation to a whole new cognitive level. The benefits, they're undeniable. Streamlined workflows, McKinsey reports 20–30% less inventory, 5–20% lower logistics costs, vastly improved accuracy. Look at Coinford automating 76 workflows, slashing errors, and genuinely data-driven decisions. American Express uses AI to prevent $2 billion in fraud every year. It's transforming everything. Customer service, like Bank of America's Erica, handling 1.5 billion interactions, financial workflows, HR, healthcare intake, even compliance management.
It really does sound like AI is becoming the new central nervous system for businesses. How is that translating to the direct customer experience, especially in something like e-commerce?
Oh, in e-commerce, AI is basically creating these personalized digital ecosystems for every single customer. It's deploying tailored product recommendations that honestly sometimes feel like mind reading. It's offering 24/7 chatbot support that's actually helpful. It's precisely forecasting demand, optimizing inventory, streamlining logistics behind the scenes. The benefits are profound. Truly personalized experiences that build loyalty, perfectly optimized inventory, meaning less waste and more availability, streamlined operations, and, crucially, significantly higher conversion rates. Think about agentic AI and virtual assistants acting like your absolute best sales associate online, guiding the entire journey, answering questions instantly, giving personalized nudges, maybe offering a special deal if you abandon your cart. Algorithms analyze every search, click, purchase to generate super relevant suggestions, boosting loyalty and upselling. McKinsey again reports a 10–30% jump in marketing efficiency, 3–5% more customer acquisition. AI fraud detection is now real-time, adaptive, learning constantly to reduce false positives. Marketing optimization allows personalized campaigns at scale, dynamic website content, automated audience segmentation, all cutting customer acquisition costs. Even website optimization gets a boost. Faster load times through AI image compression, better accessibility with auto-alt text, improved SEO, even automated content creation. The results speak for themselves. Woolsey saw a 9.6% conversion rate jump. The Thinking Traveler got a 33% increase in booking inquiries. Benson's for Bed saw a massive 41% increase in e-commerce sales. It's not just efficiency, it's a complete customer experience revolution.
Okay, it's undeniable. AI is this colossal force reshaping practically everything. But now let's zoom out. Let's tackle the bigger picture, the unavoidable questions. There's obviously a lot of hype mixed with reality, but there are also inherent risks that come with a transformation this powerful, aren't there?
Absolutely, and this raises a really important question. The potential for a widening economic chasm. We have to acknowledge the risk that wealth could concentrate even further with those who control the AI, potentially shrinking traditional labor markets and making socioeconomic divides worse. However, the view on jobs is probably more nuanced. History teaches us that while routine jobs might disappear, new categories of work will emerge, roles we probably can't even properly define yet. AI can actually enhance creative and analytical professions, making humans more effective, not just replacing them wholesale. So the urgent need really is for comprehensive reskilling programs and fostering a culture of continuous learning. This demands serious collaboration between companies, governments, and our education systems.
That collaboration feels absolutely critical. Our education systems, especially, need to adapt and fast to prepare people for this AI-driven workforce.
Couldn't agree more. And look, AI tools are already letting small businesses achieve multi-billion-dollar valuations with surprisingly few employees. They're leveraging this sort of army of digital workers at little cost. But here's the crucial caveat. The main challenge isn't the technology itself. It's unequal access. If we don't ensure widespread AI literacy and accessible funding, these powerful tools could actually reinforce existing disparities, making the playing field even more uneven.
So pulling this all together, what does it mean for us personally? I've heard this term, the singularity of hope, being used, not about machines surpassing humans, but maybe humans using AI to become, well, super intelligent.
Precisely. That's a great way to frame it. We really must embrace these advancements, but do it responsibly. Imagine a future where this continuous human-AI interaction creates a kind of self-reinforcing cycle of learning and cognitive enhancement. We could potentially amplify our own intellectual abilities over time. This really is the moment to decide, isn't it? Do we fear AI and try to hold it back, or do we actively harness its power to create something genuinely better? The change is already happening. We're stepping into an era that promises unprecedented prosperity, but likely for those who understand this shift and act without delay.
That's a really powerful call to action. Okay, let's bring this back down to earth for everyone listening. Let's unpack this for you and offer some practical steps to navigate this AI landscape, both in your investments and maybe beyond. First, always clearly define your own investment goals and your comfort level with risk. That's fundamental. Then, do your research. Compare the different AI-powered platforms out there. Look closely at fees, minimum investment amounts, the features they offer. When you do start, maybe start small. Use just a portion of your portfolio initially so you can learn how it works and evaluate the performance without betting the farm. Consider combining multiple AI tools. Maybe use one for sentiment analysis and another for fundamental analysis to get different perspectives. And remember to regularly monitor what the AI is recommending and how it's actually performing. Don't just set it and forget it, perhaps the most crucial tip. Maintain a balanced approach. Combine those AI insights with your own human judgment, good old-fashioned diversification, and solid long-term planning.
And what's also critically important, maybe more than ever, is to recognize the dark side of this gold rush, the very real rise of AI investment fraud. You absolutely must beware of the mirage. Fraudsters are deliberately exploiting AI's complex, sophisticated image. They're creating schemes around proprietary AI trading systems or revolutionary algorithms that guarantee wins or can't miss stock picks. They're using increasingly sophisticated AI-enabled scams, things like deepfake videos featuring fake experts, AI-generated audio calls, incredibly realistic fake websites and marketing materials. So the essential safeguards are clear. Always verify the registration status of any investment platform or professional you're dealing with. Be inherently wary if AI just feels like a marketing buzzword. Legitimate tools are usually transparent about what they can and importantly cannot do. Be extremely skeptical of any promise of guaranteed returns, outsized returns, or risk-free profits. It's a huge red flag. Independently verify identities, especially if you're interacting purely online. Don't trust blindly. Remember, AI enhances analysis. It cannot guarantee profits, ever. And be very cautious of high-pressure sales tactics pushing you to invest quickly. The timeless advice holds truer than ever. If an investment opportunity sounds too good to be true, it almost certainly is. AI helps us understand probabilities better. It cannot predict the market with certainty. Its accuracy varies a lot. It's a tool, not absolute truth. And no matter how smart the AI seems, it never ever replaces basic financial literacy.
So there you have it, the AI gold rush. Clearly a powerful, transformative tool in investing and across business. It's becoming more accessible all the time, but it absolutely demands our human oversight, our critical thinking, and a healthy dose of caution.
Exactly. And maybe the true measure of this AI revolution, when we look back, won't just be the trillions generated. It might be how we, as a society, collectively choose to harness its profound power. Will we simply chase the immediate gold, focusing only on profits?
Yeah.
Or will we make the conscious effort to sculpt a future where AI genuinely elevates human potential, hopefully, for everyone?